Time now for our weekly market monitor, who this week has some names of 3 high-quality, large-cap stocks that also pay a dividend. Barry James is back with us. He's president and portfolio manager at James Investment Research. Always good to see you, Barry. Thanks for joining us tonight.
Glad to be with you.
Let's start with Molson Coors. I'm interested in this one. Here's a stock that's lost roughly half its value in the last couple of years with all the competition from those small craft brewers. Why do you like this company still?
Well, there's a lot of things to like about the company. First of all, they're really cheap. They're trading at a price that's less than what the accountants say it's worth. So that's one thing. And compared to others in its field, it's much cheaper. They have been paying back their debt, so they're very strong financially right now. And if we do see a slowdown in the economy, that's generally pretty good for beer makers. And they have expanded into a lot of the craft area. Some of the names, are pretty weird. Some of the brand names that they have in their stable, but nonetheless, they're taking the challenge head on.
And next is in the finance sector, insurance company Travelers. Why do you pick this one?
Well, it doesn't have any effect from China trade. That's one of the things. It's all done here, and it is really helped by interest rates dropping. So much of their portfolio is invested in bonds that is obviously a benefit. They've got a bit of a yield, and they've been buying back shares. So there's a lot of positive things there for the company. And in this type of environment, we think it's good to have something that's somewhat defensive, like a Travelers Insurance.
And then finally, Verizon. I'm guessing that 4+% dividend yield is one of the first places you start at right now.
I hope that isn't the bait that gets you hooked.
Right.
And an unfortunate event happens after that. But again, they're just a cash machine, over $18 billion in free cash flow. They can do just about anything, buy anything that they want, as it were. And people have stacked up their bills and they say, number one, I'm paying my cell phone. Not food, not credit cards, it's their cell phone. So they're in a very good position as far as that goes. And with some consolidation in the industry, that works to their benefit as well.
Very, very quickly, Barry, the overall market, how do you feel about it?
I think it's pretty risky right now. People are kind of, they have a trifecta of anticipation: lower interest rates from the Fed, a rebounding economy, and China trade. But the one thing that really worries me, 80% of the stocks are now controlled by machines.
Right.
60% in index funds and 20% in quant funds. And so they're buying just because they exist, not because the earnings are good. And we've seen companies with no earnings go up more than companies with earnings.
Right.
Again, doesn't make any sense. That's risky, so be careful.
Barry James with James Investment Research. Again, thanks for joining us tonight, Barry.
Good to be with you.